Hey traders, welcome to Charts and Coffee. Hope everyone is having a good Thursday morning. Couple notes here on the left side of the screen here as we start up. We have the aftermath of the 830 core PCE, the initial claims. So we're dealing with the hot zone aftermath. And generally, if you take a look at what's been happening since 830, it's really been a whole lot of nothing on the S&P and the NASDAQ. We continue to be stuck in this Darvis range. It's been in place since probably just before 8. So nothing really to report there. You know, sometimes when the indices aren't really responding in a big way to an economic event, sometimes you might see a little bit more drama unfolding in things like bonds or gold. Bonds continue to be very heavy, not because the Federal Reserve is not going to cut rates in November and even possibly December. Bonds are looking out 3 to 6 months from now, and they're really questioning whether or not the Federal Reserve, amongst many, many things, but one of the things that bonds are definitely putting a big question mark over is whether or not the Federal Reserve can continue to cut at the pace that we expect. And expectations can be seen really clearly through the Fed Fund futures contract. So bonds are sort of doing their own thing. Gold is heading a little bit lower here today. I would definitely keep gold on the radar. We've had opportunities in gold. We continue to sort of roll with it. We definitely want to get back into gold via mostly GLD. Again, I'm going to be leaving GDX alone, however. For those of you that are wondering, Rog, what happened to GDX? Just take a look at Newmont Mining, NEM. So that's really where I'm going to leave GDX alone, focus on gold. All right, so I have this particular chart up here. And the reason I'm looking at this is ultimately what we want to look at, all right? And here's where whether this could be general end of month questions that you might have. This could be general election question trades and trends that you might have. It's all going to be answered here, okay? What are the trends? And what kind of volatility are you willing to sit through? Now, that volatility could be tomorrow's non-farm payroll. It could be Tuesday's election, Wednesday's results. It could be Thursday's. Now, remember, Tuesday really is a Wednesday hot zone next week. Right, when we think about when the equity markets finally get to en masse respond to whatever happened on Tuesday. Thursday, we have the FOMC. So think about the response. So 8:30 tomorrow, non-farm. Wednesday's open next week, the reaction to the election. And even then, we might not have a full picture, but we should have enough. It's not just the presidential election that matters. It's also the congressional. And then Thursday, we have Jerome Powell. And frankly, if I'm going to rank those 3 events, next Thursday's FOMC is the most important, followed by non-farm payroll. The elections are not as important to the equity markets in terms of the results as people think. It is generally a bullish catalyst, but it tends to be. Tending to be something is not necessarily a trade setup, right? Okay, so let's take a look at this sector charting. I'm going to show you a couple things you can do. All right, number one, just take a look at what's been happening the last month. The election is not an unknown thing. Jerome Powell's decision with the rest of the Federal Reserve on November 7 is not an unknown thing, right? So these are on the schedule, and preparing for something that's on the schedule means that traders will be discounting, which is to say they're putting on positions before the event happens, kind of like earnings, right? Okay, the last month, and this right here is the NASDAQ over the last month. And what I'm going to do is I'm going to turn the specific, everything but semiconductors, all right? So what we have here is the NASDAQ, that's in blue, and then the varying shades of the pink and the yellow are communications, consumer discretionary, and technology. The NAS has been largely moving higher because the individual sectors within it continue to, for the most part, move higher. Interestingly enough, the one that's catching my eye the most, let's take the NASDAQ out, right? And let's just look at the sectors. So now I'm taking a look at communications, which you can see here while the other two are moving lower right here. This is consumer discretionary. This is technology. XLC is moving higher. Okay, so what's going on under the hood in XLC? Right, XLC is moving higher. Why might it be moving higher? And then we go back and think about what's going on with earnings. Obviously, there are going to be a number of dramatic, sometimes gaps and moves on earnings. Meta has moved up pretty sharply. Google moved up on earnings pretty sharply. XLC has been a fairly bullish sector within the NASDAQ. We have some bullish moves within it. And so XLC right now is an outperformer. Why does that matter? Okay, Rod, you saying that communications and NASDAQ are important to the elections? No, gang, trends are the most important thing, right? That's what we're talking about. And while we're trading trends, certain events are going to be in the path. So we want to differentiate whether or not the trends are most important or the events. Well, for some traders, the event is most important, right? They want to trade earnings. They want to trade the economic releases. I'm not saying there's a choice that's good or bad. I'm just saying this is the choice that I make. So events to me are secondary to the actual trend. And that's going to include anything that we have coming up over the course of the next week. But these are different ways we can visualize them. So here's another way we can do it. Let's take a look at the S&P. And if I'm going to look at the S&P, we're going to take a look at financials. We can look at energy and healthcare as well as technology. Right. So 4 things we can look at there that belong to the S&P. The S&P here is in what? White. Okay. So ultimately, what we have is a fairly flat-ish. It's up 2%. But what's performing better? What's performing better than the S&P? We see XLK is up there. So we go right back to the NASDAQ and an important sector. That's Apple. That's NVIDIA. That's not Home Depot. Apple, NVIDIA, Microsoft, right? What's really weak? Healthcare. Leave healthcare alone. What else is pretty darn weak? I would leave energy alone. If we take a look at these, including the S&P, XLK is up almost 6%. S&P is up just over 2%, and financials are up 4%. So these are the trends. What do we want to avoid? I'm going to avoid energy. I'm going to avoid healthcare for now. And we can do things like this again and again, contrasting the index to the sectors that it has within it. This is high concentration weighting understanding. This is sort of the sector secret, right? Why are the sectors so important? Why are their weightings so important? Why are the weightings of the stocks in the sectors and in the indices so important? Because a very small number of things, whether they be sectors or stocks, influence the broader markets. Yeah, there might be 500 stocks in the S&P. And yes, the S&P is trading below the previous session close right now. There might be 500 stocks in this thing, but frankly, only about 20 matter. And a few more might have a little bit more impact during earnings season, where a low-weighted stock can make a high price move and have a little bit more impact. But there's really only about 20 meaningful stocks in the S&P, dictating for the most part where this 500 stock index is going. So those are things that we want to keep in mind. What are the trends? What's outperforming? And stick with that. Because the way in which most market participants are going to look at an event, whether it be the Federal Reserve, whether it be non-farm payroll, whether it be an election, whatever it is, fill in the blank, even earnings, right? There's going to be discounting that happens in front of that event. Not all of the reaction is on the release, right? There's not a huge amount of necessarily election trades waiting to happen on the open on Wednesday, right? That's not actually how it works. There's not a bunch of earnings trades waiting to happen the first day after the earnings are released or the morning of earnings. There's all these trades that are put in before, and then the correction. Oh my gosh, we shouldn't have been long. Oh my gosh, we should have been long. Oh my gosh, we shouldn't have been short. Oh my gosh, we should have been short. That trade goes in after the data or after the hot zone happens. And again, it doesn't matter, fill in the blank. It doesn't matter what it is. That discounting is the most important thing. What's happening in the lead up to the event. All right. Okay, so hopefully everyone's got a little bit of an idea of, okay, Rag, I can look at the way in which certain sectors and stocks are behaving. I can go find the relative outperformance. And if you've been watching me and this show for any period of time, I would imagine that's something that, or even the free videos, I would imagine that's something everyone's pretty darn familiar and hopefully comfortable with. Another way to do it is just look at a number of these sectors lined up. And one of the things that I did I can't remember if it was a free video or in the Sector Secrets Mastery Room yesterday, to look, there are some industries that are kicking up right now. Whether they're election related or not, I'll be frank, gang, I could care less. There's an event, there's a trend. It could be the FOMC. It could be any number of things. But JETS, Jets, is moving higher. The more recent those moves are, the more I'm going to credit it to some sort of anticipation of the event to come. JETS is moving higher. That's been something that's been in the dumpster fire. October has been a huge, and you wonder, what's JETS? It's the airline ETF. KRE has had a very good October. Financials have had a good October. Communications have had really kind of stable, but most recently after some earnings, kicking up higher. GDX has been all over the place. Had a good mid-month, pull back hard. What is that? What does that move lower? That's the number one weighted stock in GDX. One stock has overridden all the other names in GDX because of its weighting and the general strength in gold. That's how important understanding the weighting is. All right. So there's a lot of ways you can visualize this, find the one that suits you, and then go into the event with those sectors in mind, knowing I don't care what the reason, let's stick with the trends. Yeah. We just finished up the third classroom session of the small account growth plan. And one of the main tenets of that is to find trends. It came up yesterday, Rob. We know you have some indicators that measure overbought and oversold. We can trade bullish chop, bearish chop. And you know what I said, for the purposes of that class, and really for the purposes of the first and the most important thing we always should be looking for, stick with the trends. If something's losing the trend, find something else that's attracting the dollars that are clearly flowing out of that. Money doesn't go under the mattress. There may be fewer uptrends, but something somewhere will be moving higher. It just might be fewer somethings, right? So find the trends, gang. That's always the answer. Find the trends. It's almost every single question out there. Magic 8 ball. Shake it up. Find the trends. We need a magic 8 ball for traders is what we need. All right. So let's go ahead and jump into some questions that we've got here. All right. So let's see. Oh, my friend, how are you doing? We miss you. We miss you too. Taking long calls on HWM. Hope everything is good with you and your family, my friend. All right. So taking long calls on HWM. Long term. Oh, okay. We need a pullback. So on the daily, you can see we're in a mean reversion. Yeah, you can see we're in a mean reversion on the daily. But if you're thinking leaps, that's going to be a weekly time frame conversation. And take a look. Unbelievable trend here. Yowza. Yeah, looking for a pullback. Where we would be looking, the soonest, maybe $90. And then the mean reversion is between $85 and about $79. And, you know, if there's a Darvis, kind of like what we saw here back in July, if there's something like that, go for it. But yeah, this is an unbelievable chart. Buy the dip, absolutely. And that would be either about $90 or between $85 to $79 if you're looking for more of that conservative mean reversion. I'm not holding my breath for this one getting back to the 200. We may not see that unless we see a dramatic move to the downside, but good looking stock. Find the dip. Yeah, and enjoy the ride higher. Absolutely. All right. So next up, question wise, is Starbucks. Sure. So if I'm looking at Starbucks, let's crack it open. Starbucks belongs to the XLY, which is more in the NASDAQ camp, by the way. So what I want to do is I'm not looking at Starbucks first, right? I'm looking at everything else that Starbucks hangs out with, right? And I'm comparing it to those things. I don't trade Booking. It's a bonkers price stock, but that's what an uptrend looks like. Airbnb would not be on the list as well. After that, I'd say kind of in close, distant third, I'd keep an eye on CMG post earnings. No, I can't. Never mind. There's a big old red candle there. So forget CMG. Tesla, if it can continue to hold green candles. Amazon. And then, yes, lastly would be Starbucks. So when I'm looking at something like Starbucks, again, I'm not playing earnings ever. We have, as you can see here, we have a number of economic events that came out yesterday after the close. I'll leave a name like Starbucks alone. So my guideline is any stock going into earnings, I want to be done with it at least 1 to 2 days before. So close the trade out. We did that with, oh my gosh, what did we just close out? It was a nice winner for us, PayPal. We closed that PayPal with something just going up, up, up and away. And we had options, not that they were expiring. We had an earnings event. So we took advantage of the bulk of this move higher and exited PayPal before earnings. So that's the first window. When do we get out before earnings? Remember, I don't trade earnings, gang. I have zero interest in a binary, gas station, lottery, scratch off ticket type trade. However, after earnings, so today would be the first session that the broader averages really get to respond to Starbucks. So tomorrow, when that 1 day now is completed, tomorrow would be the first day I'd even consider anything. But regardless of earnings, I mean, Starbucks would not be near the top of my list of anything that I would want to do within the XLY. That would likely be Airbnb, which, by the way, has earnings on the 7th of November. But let the dust settle and then see if there's anything that Starbucks is triggering in terms of maybe an oversold buy. That's the way I would treat Starbucks, as bullish chop. All right. All right. Next up, Perry asks, when getting into a position, is there a criteria I look for when picking an expiration date? Perry, it's going to depend on whether or not I'm setting something up that has a trend versus not a trend, whether it's a 1 hour setup trend or whether it's a daily time frame setup trend. So the trend is going to be a big consideration, and the time frame that I'm trading. So the longer the time frame, the more time that I want. The shorter the time frame, the less time frame that I need. So that's usually what I'm looking at. And then trends would obviously, if I have a trend on a daily, I'd like to have more time than if I had no trend on the daily. So that's going to be a big difference. Smoke Divine asks, gap down for Microsoft. Is it a good time to buy January calls for a Christmas rally? We need a setup, right? So I'm not going to presume this is going to be a stock that's going to benefit from end of year strength. I think that's a big assumption. There are other stocks that probably look better that might benefit from window dressing, which is what that end of year rally is. We need a setup. Yeah. And I don't have a setup quite yet. Smoke Divine? No, not yet. I would like it to stay green candles longer. And I would like to see a pullback to it. If you're looking at something longer term, I'd say anywhere between 415 and 406 could be interesting. You have a Darvis level on the weekly chart down at 386. I don't know that we had that back down there again, but that's not a setup for me, right? Those are events that could happen, and then I need to set up on the chart that could line up with that. All right. Family is good. Good to hear it, my friend. All right, gang, I'm out of time. I'll see you all tomorrow. Same time, same station. Be good to each other.